Disclaimer: the contents of all materials produced by Ascendo Traders and Michael Glass are for educational purposes only. All opinions, ideas are for informational purposes only and should not be construed as an investment advice. Any investment decisions made based upon any videos produced by or on the website of Ascendo Traders are taken at their own risk. We are not a licensed investment advisor, so therefore we do not offer any buy and sell recommendations. Trading involves a high level of risk, and it's not suitable for everybody. Past results are not guaranteed, and future results can be dramatically different from those expressed in a video. Consult an investment professional before investing. Trade at your own risk. So now we're ready. Let's talk about the components to the Ascendo Traders trading plan. Well, we believe that we divide our trading plan into 4 core components. The first one is you have to determine the trend. What is the direction of the market at the current time? You need to be able to identify if your trade is with the trend or if it's a counter trend, and you will adjust your position sizing based upon that information. Secondly, we have to identify the location. Where are some key price level points that we need to be aware of that will be good places to enter our trade? Support and resistance, moving averages, pivots, all of these things are key price levels when combined with the direction of the market that we can find good places to enter a trade. So as the market is trending in our favor, we have identified a good location to enter our trade. We now need a trigger that says now's the time to go in. Most people use some form of technical indicators, price action, market internals. All those things are ways that we can trigger ourselves into and out of a trade. Finally, once we've identified our direction, key price levels to get into a trade, and we've gotten our signal to enter the trade, we need to manage the trade. We manage our trades by knowing what our risk-reward ratio is, and we have a stop and a target identified to getting to protect our capital. So I'm sure this is not a phrase that you haven't heard before. Until you know where you want to go, you can never get there. And this is basically the core of understanding why you need to have a trading plan. I mean, that's really the core of our system, is about developing a trading system and a trading plan for your trading. But you know, when you want to get to actually getting into that trading plan and actually developing it, the first question you got to ask is, well, where do I want to go? What do I want to achieve? What do I want to be? What do I want to be as a trader? Who do I want to be as a trader? And until you know that, how can you become that? You got to know what your objective is going to be. As a teacher, I can tell you, you know, having taught elementary and middle school teachers, you know, we had to do our lesson plans, and all of our lesson plans had to have an objective. Because if you didn't have an objective for the lesson, you're not teaching; you're just kind of talking. And more importantly, you're not going to be able to tie into background knowledge. You're not going to be able to tie into what you're going to the next day because there's no objective. So you got to have the same thing for trading. You got to have an objective to why you're actually sitting at the computer trying to make trades. So again, what do you want to accomplish? Is there a dollar amount? Is there a lifestyle? Is there a present, a gift that you want to get? What is it exactly that you want to accomplish? And then, is your goal realistic? And the biggest part of that being realistic is time frame. You know, so many people want to, you know, retire in, you know, a year or 3 months, or, you know, buy a new house in a month. And, you know, the actual objective is reasonable or realistic, but the time frame is not. So, you know, you have to gauge whether or not you're being realistic with what you want to accomplish. One way that we can help develop a trading system, but more importantly, identify your objective, is identify what are your strengths and weaknesses. Again, what time frame do you want to trade? What resources do you have? What's your return expectation? What do you want to accomplish? How much money are you going to start off with? What's your capital? What expenses are you going to incur on a daily basis, a monthly basis, weekly basis? What skills do you have? Are you good with computers? Are you good with charts? Are you good with technical analysis? Are you good with fundamental analysis? And finally, and probably one of the most important things, is your drawdown tolerance. How much money are you willing to lose before you start freaking out or quit trading, or so what is your tolerance? Risk. Previously, we talked about risk tolerance. So what is your drawdown? How much money can you lose on a trade or per month before you start getting emotionally involved? So let's take a look at that a little bit further as far as developing our trading system. Again, taking inventory and identifying what are your strengths and weaknesses. Are you good with the computer? Are you good with charts? Are you good with technical analysis? Are you good with your emotions? I was talking with some friends and I said, oh yeah, you guys should definitely be better traders than me because you're not as emotional as I am. They're all engineers, and so they're very analytical. Although some people say engineers and accountants make bad traders because they are analytical. The next thing is developing open mind as you're gathering your market information. Remember, you tend to invest according to your beliefs. So if you believe the market is going up, you don't see anything about the market going down. Therefore, you don't have an open mind. So you got to believe anything can happen. But at the same time, you want to keep gathering information to help you eventually form a bias. There's nothing wrong with forming a bias as long as you're open to anything can happen. You can be bearish about the current condition of the market right now, but be open to the fact that when we open on the next day, that it can be an up day. Here we are again talking about your objectives. How much money do you want to make? What type of lifestyle do you want to live? What time frame do you want to trade on? Do you want to be a short-term trader? You want to be a long-term trader? Now, to different types of traders, those things be differently. Long-term could be a year. To a day trader, long term could be 10 minutes. So, but again, what type of trader do you want to be, short term or long term? You got to figure out what are the best chart patterns. And really what we're talking about here is historical patterns, but I like to say chart patterns. Once you determine the market that you're going to trade and the time frame you're going to trade, you need to find out what patterns happen and the behaviors that repeat in that market so that you can find a way to take advantage of those patterns. Also, we want to talk about protecting our capital. So where are you going to place your stops? Protecting our capital is also about protecting our profits. So we have to calculate our targets and know how to take our profits. One of the best ways to for risk management, capital management, money management is position sizing. You can take a losing trade into a winning trade by properly leveraging into, positioning into a trade. How can you improve? You have to reflect, you have to back test, and then even after you're done back testing, as you're enacting your trading plan, you have to test it and make sure that the market conditions have changed. If you're looking at chart patterns because the market's in an uptrend, when something happens and changes that sentiment of the market to go down, you have to change your trading style, you have to change your bias. So always be looking to improve, always look to be a lifelong learner. And then prepare for the worst case scenario. There are going to be trades where you're going to lose. First and foremost, it's not the worst case scenario, it's the cost of doing business. But there may be a time where you have 2 or 3 losing days in a row or trades in a row. You got to prepare for those worst case scenarios that may impact your emotional stability and be prepared to overcome them so that you can get into the market the next day with a strong mental mindset. It's estimated that less than 20% of traders in the market have a system to guide their trading or investing. So there are 6 key elements to making money in the market. System reliability, reward to risk ratio, the cost of trading, your trading opportunity level, the size of your equity, and position sizing. And notice that a lot of what we have there have more to do with managing the trade than we are talking about necessarily entry. Entries are important, but understanding your commissions, the cost of trading, understanding your risk to reward relationship, understand the size of your equity and your position sizing. For these six really have to do with the management of your trade, whereas the system reliability and the trading opportunity have to do with, getting in and get out of the trade. So notice that, because it's important to note that it's not the technical analysis going to make you a winner. I was talking with a friend today, and we were analyzing two experts, I'll call them, and one of them, I told him was a technical analysis guru. He's a technical analysis guy. However, when it comes to trading, he's sort of a gunslinger, and so therefore, you may get two winners and make a lot of money, but how many losers are going to be in those three winners to kind of weigh down on those profits? Whereas another person is more of a system trader. Maybe doesn't know technical indicators as good as the other person, but because he has a process to getting in and a process to getting out, I think he's a better trader. Doesn't mean, well, I guess it doesn't mean I think one's better than the other. But again, the key to say in that scenario is that it's not about the indicators that you use, and it's not about the system. There are hundreds and thousands of traders out there trading differently. But what is important to make the longevity of your trading is that you understand how to manage your trade. So, as we get ready to get into the actual components of our trading plan, and we're glad that you come this far, and you're not going to be one of those traders who are the 80% trading without a plan, we want to remind you that the Legend of Holy Grail is not about the system. We're going to share with you a system. And one of the great things about this whole program is that we're going to provide the coaching so that we can ensure that you're enacting any system properly. But remember that the Holy Grail is the internal struggle that you have. It's the fact that you're taking responsibility for your trading and you're not allowing your system be the responsibility of your trading. The Holy Grail is your internal battle, your internal struggle over your profits and your losses and how you handle that. So as we move forward into the components of we share our components of our trading plan, remember that this is not the end-all be-all. You need to be a lifelong learner. You need to learn how to incorporate this into your style, make sure it fits who you are, and if it doesn't, continue your research to find out how you can modify it to make this all about you. I mean, that's one of the things about teaching was that, there was 4 teachers on my 4th grade team, and I would tell parents, we're all teaching the same information. The difference is the personalities of the teachers. I'm a laid-back person. I'm going to teach with humor. This person over here is more of a dictator, and so they're going to teach through discipline. This teacher over here is another, so it's the same thing with trading. There's hundreds of trading systems out there, but how are you going to implement these, place your mentality, your risk tolerance, your stability, who you are as a trader, how are you going to implement it through your own personality? So now we're ready. Let's talk about the components to the Ascendo Trader's trading plan. Well, we believe that we divide our trading plan into 4 core components. The first one is you have to determine the trend. What is the direction of the market at the current time? You need to be able to identify if your trade is with the trend or if it's a counter trend, and you will adjust your position sizing based upon that information. Secondly, we have to identify the location. Where are some key price level points that we need to be aware of that will be good places to enter our trade? Support and resistance, moving averages, pivots, all of these things are key price levels when combined with the direction of the market that we can find good places to enter a trade. So as the market is trending in our favor, we have identified a good location to enter our trade. We now need a trigger that says now's the time to go in. Most people use some form of technical indicators, price action, market internals. All those things are ways that we can trigger ourselves into and out of a trade. Finally, once we've identified our direction, key price levels to get into a trade, and we've gotten our signal to enter the trade, we need to manage the trade. We manage our trades by knowing what our risk-reward ratio is, and we have a stop and a target identified to protect our capital.